Hello, everyone, and welcome into CrushTheStreet.com. I'm Kenneth Amador, and I got a brand new guest on the line with me here, James Corbett, and he's got the CorbettReport.com, and he's been living and working in Japan since 2004, and he started the Corbett Report website in 2007, and he calls it an outlet for independent critical analysis, politics, society, history, economics. This is the kind of website and the kind of guy that's going to really dig deep, go behind the curtain, and talk about things that really the mainstream media isn't talking about. And I feel like we're going to get some good insight today on what's going on in the economy and maybe some things the mainstream media isn't covering. And you know, he's done a ton of research out there. He's an economist. He runs a podcast, and he's an editorial writer for the International Forecaster. And so without any further ado, James, thanks for coming on Crush the Street with me here.
Well, thank you for having me on. It's a pleasure to be here.
Well, in latest news, we've had another Fed rate hike. And I guess my question is, in your opinion, when is this going to start to hurt as Powell is signaling aggressive rate hikes going forward here?
Is it going to start to hurt is the real question, because we now live in this economic fantasy land where bad news is good news. So every time there's some potentially economically cataclysmic news, the markets celebrate and reach new record highs. Because, of course, I think the fundamental breaking point was reached a decade ago when we saw the financial crisis and we saw the results of that financial crisis. One of the greatest moments of anxiety and potential cataclysm in recent economic history was met with trillions upon trillions of dollars of bailouts for Wall Street and connected to banking institutions. So the idea of any sort of moral agency in the economic sphere has been fundamentally removed from the scene, so that now investors are assured that if there is some sort of horrible cataclysmic thing that happens, it's going to result in free helicopter money from the Fed and raining down into the markets. So, hey, it's bad news is good news. So rate hikes are not having their old intended effect of sopping up some of that credit that's been spilled around over the last decade. As we know, as other people have documented, and it's been reported on Yahoo News and everywhere else, 93% of the market rise from 2008 to 2016 was directly attributable to the money that the Federal Reserve pumped into the system through its quantitative easing and other programs that it's been running for several years. And this is just the after effects of that. They're trying to clean up and hope that there's no hangover or no toxic effects from all the cocaine that they spiked in the punch bowl. And now they're trying to sop it back up slowly through the straw with these rate hikes. And no, don't worry, guys, it's everything's going to be okay. Personally, I'm not buying it. I think at some point, economic reality will intrude back upon this illusion that's been drawn over us. But for the time being, it's party like it's 1999, which may be the best analogy here, because of course we know that was the peak of the dot-com bubble. And we know what happened after the dot-com bubble burst. So are we seeing a repeat of that? I guess time will tell.
So James, what exactly are you predicting then? Using that example, the 1999 dot-com bubble, it was a correction. It was a stock market crash, what have you. But then, otherwise, most people would say things just kept going, right? And same thing in the 2008 financial crisis. It was a bad financial crisis, but here we are in 2018, and things feel pretty good. We got as far as headline numbers go, low unemployment and wages are rising. Are we in for a correction? Are we in for something even bigger than we even saw in 2008?
Yes, and yes. I think both. I say that 2008 might have been the breaking point of economic reality, where we entered this bad news is good news inversion. But you could make that argument that happened back during the dot-com bubble and the breaking of that, because, as you say, things went along. And in fact, the markets have now reached new record highs that they hadn't even hit during the 99 peak, during that irrational exuberance, as we all remember Greenspan deeming it back in the 90s regarding pets.com and anything else.com suddenly getting billion-dollar plus valuations that just had no bearing on economic reality. Well, now we've got Facebook and Twitter and Google and all these companies that can barely turn a profit that are somehow hitting these. Well, Apple has $1 trillion in the bank now. What's going on? Oh, it must be all corrected somehow. No, of course, the breaking of the dot-com bubble and the potential cataclysm that could have, should have eventuated and didn't really eventuate. Even after 9/11 and all the craziness surrounding that, the economy actually did really well and entered this crazy kind of bubble period. Oh, right, bubble period. The housing bubble, the subprime, which led to the 2008 crisis, which led to the quantitative easing, the $1 trillion of bailouts and loans. And what is the next stage in this? Again, they keep blowing up the bubble further and further after each crisis, making the next crisis even worse. So if 2008 was bad, what will 2018, 19, 20, whatever it ultimately ends, what will that look like? Again, as Yogi Berra says, predictions are hard, especially about the future. So I don't have a crystal ball. I have no idea what the time limit on this period of economic inversion is, but it will snap back at some point. And I think one of the things that might bring us back to some sort of economic reality is the trade wars right now that are shaping up and that we're just seeing, I think, the beginning of. As some people have warned, this could be a decades-long process that is being kicked off right now and will absolutely have an effect, obviously, on China. I think are going to be in the short term, are obviously going to be feeling the effects of this, being a heavily export-dependent economy still, despite the Chinese Communist Party's best efforts to wrench things around and make a more domestic, demand-driven economy. That's not the case at this point. So they're going to be feeling the effects of this, but ultimately it will come back home to roost, and this will affect the US as well. And at that point, and when it starts disrupting global trade, which has been the backbone and engine of global growth, economically speaking, for the past couple of decades, what is that going to mean? And what is that going to portend? Again, I don't think you can pretend and you can paper things over with paper dollars as much as you want. But at some point, when the piper comes calling and dues have to be paid, are they going to be paid in US dollars, US Federal Reserve notes? And if so, for how much longer will that system be maintainable?
Yeah, it's an interesting dynamic going on, especially with the trade wars, as you brought up. I think in an earnings call, I read this, that in earnings calls for this year, we've had more talk of trade wars than at any other time in history. And so I know companies are very concerned about this. And I'm curious because, this would ultimately mean higher prices and could trigger a slowdown in the economy going forward. But as you pointed out, bad news is good news. So it's kind of an interesting thing. And, as you also pointed out, China exports a lot more than the U.S. exports. So in theory and initially, it would seem like it would be more of a problem for China dealing with these tariffs than it would be for the U.S. So maybe you can just expand on that a little more. And who would be the bigger loser in this situation? Dealing with these trade wars.
Yeah, it's a good question because it's not as obvious as I think some people would paint it. I think in the short term, it is obvious that China is going to be feeling the greater effects. The U.S. economy can absorb this with a lot more ease than the Chinese economy can absorb this type of disruption. And we're already starting to see the beginnings of the thin edge of the wedge of that. For what it's worth, the Asian Development Bank has just downgraded their growth outlook for the Asian region generally from a 6% plus growth projection for 2019 down to 5.8% and blah, blah, blah. I mean, this is, again, just the beginnings of it, and take these predictions for what they're worth. But I think everyone understands that the type of trade disruption that's happening now is going to start affecting Asian developing nations as well as China, as well as us here in Japan. And that's going to have the bigger effect in the short term. But the longer term consequences of this, as I say, are not as easily apparent, because I think if China is able to weather the immediate storm that's coming right now, they are potentially in the better position to wait this out in the long term. And I say that because, of course, we have seen in the last several years the unbelievable spending spree that's going on in the One Belt, One Road initiative, the Belt and Road initiative that is now pumping, well, is projected to pump as much as $1 trillion into various countries throughout Central Asia, Africa, into Europe. We're starting to see the creation of an entire alternative trading infrastructure that did not exist, that is being funded with the money that China has built up through its reserves, through its trade surplus with the US over the last couple of decades. They're now pumping that into purchasing physical infrastructure and the trade routes and the access to markets that they need in order to circumvent their reliance on the United States. And as the US pushes away not just China, but really all of its trading partners at this point, even Canada and Mexico, and threatening all sorts of trade wars in all different directions, China is going to start seeing, I think, more willing allies in its quest to build up this alternative trading infrastructure. One example of which was recently we saw the German finance minister come out and say, we need an alternative to the SWIFT network. Of course, the banking communication network that basically all banks in the world use to communicate and to transact across borders, which is a politically neutral organization, quote unquote, based in Belgium that, well, in 2012, when the US State Department put pressure on the EU specifically to sanction various Iranian banks, the SWIFT network felt that pressure and ultimately did delist those Iranian banks from the network. When China and Russia saw that, they said, well, this is a weapon that can and will presumably be used against the US State Department's enemies in the future, i.e. us. So we need an alternative to this. So we saw the creation in 2015, I believe, of the CIPS, which is the Chinese version of SWIFT, that they created as basically a get out of jail card should and if and when those sanctions start to fall down on them. It's kind of a pipe dream thing in some ways, because as I'm sure some people saw, immediately after the creation of the CIPS, it signed a memorandum of understanding with SWIFT for SWIFT to actually carry the communications, the transactions for the CIPS network. So the SWIFT alternative actually uses SWIFT. So it's not much of an alternative, but the idea is there. And just a few months ago, we saw the German finance minister say, there's all this pressure from the US about the Iranian banks again. Maybe we need an alternative to SWIFT here in Europe. And now we're starting to see the beginnings of that happening. At some point, it's going to occur to China and Russia and the EU and whoever else that, well, if we combine our efforts, maybe we can actually create a real alternative, not just this toothless CIPS or something like that. And when that starts to happen, and when we start to see Europe heading more towards Asia than towards the US, then we can see probably a significant shift. And that's a longer term thing. I'm not seeing that happening in the next few years, but certainly over the course of a decade or 2 decades, especially if the trade wars increase from here and the situation gets exacerbated, one can imagine that the ultimate conclusion of this will be the creation of an entire alternative infrastructure that will not depend on trade with the US, which is essentially the US cutting off its own nose to spite its face, because, yeah, it might win in the short run, but if in the long run it creates an entire alternative structure which ultimately dethrones the dollar, because who needs to transact in Federal Reserve notes? Who needs to buy all these US treasuries when we have all of this infrastructure and we're doing all this trade amongst ourselves? At some point, some sort of alternative will make economic and monetary sense. And at that point, if the US dollar ever does get dethroned as the world reserve currency, it's essentially game over. That's the point at which you cannot participate in this economic inversion anymore, because reality will not be able to cover over reality with the paper dollars at that point.
Yeah, it's one of those things, and I'll be upfront. There's a lot of things about Trump that I like, but one of the things, obviously, growing the deficit, he hasn't been any better at that than anybody else, right? As bad as anybody else, and even worse. And the question could be asked: is China, for every dollar that they're going in debt, are they investing it in a better way than the US is, spending money for wars and military all around the world, and entitlement programs, while China is also going into debt, but building out 100 years worth of infrastructure and growth, and pouring it into their economy for a potentially more lucrative, a better ROI in the future than, let's say, each dollar that we're going into debt here in the U.S. So, yeah, I mean, having said that, maybe touch on that a little bit and share some thoughts.
Yeah, well, I think most people who are just casually looking at the headlines probably don't appreciate the fact that, yes, the first decade of the 21st century was, from the Chinese perspective, was very much dominated by the general growth of global trade, and their incredible GDP growth in that period was driven by actual productive trade and economic activity. From the point of the 2008 crisis onwards, the Chinese economy has been largely relying on the spigot of money from the People's Bank of China. It's been largely credit-based boom over the last decade. But, as you say, unlike the Federal Reserve, which was just basically pumping money into the Fed parked holdings of the various banks to basically make sure that they were properly, they had their proper reserves so they could continue to function, and it was just sitting there doing nothing, adding absolutely nothing to the productive economy. The Chinese, on the other hand, were all this time investing in actual infrastructure, in productive economic activity, in creating the ghost cities that everyone has heard about at this point, which is going to facilitate the largest migration in human history as the Chinese rural population starts to move into these ghost cities, and they're not so ghosty anymore. We're going to see some incredible things happening, presumably, assuming all of this continues going forward in the next several years. And that has been based on this, it's been a credit boom in China for the last decade, but it's been a credit boom that has now physical, tangible results to it. And the next stage of that, of course, is the Belt and Road Initiative that we're seeing going into place now. And now it's not just in China, it's throughout Central Asia, it's in Africa, it's in other places now that this physical infrastructure is going into place. And the Chinese are doing it the smart way, I guess, or the crafty way, in terms of providing all of this money for this infrastructure through these extremely low interest loans and sweetheart deals with various people who are participating with them, but a couple of strings attached. And one example of that was the deep sea port that they built for Sri Lanka recently. Sri Lanka couldn't end up paying the payments on that, and China took physical possession of it this year. So they're getting the physical infrastructure that they're helping to finance all around the globe at this point, or at least, as I say, in Central Asia and Africa specifically. And that is a significant change. Obviously, they're converting all of this debt and the sort of economic capital that they've accrued over the past couple of decades into physical infrastructure and geopolitical capital. Again, it's a long change, and it takes time for that to happen, but it is happening as we see right now. And that's why I think the long-term implications of a trade war are very different than the short-term ones.
Yeah, I guess it's always been a function of being the cleanest shirt in the basket of laundry, right? And that's always been the U.S. in this situation. And the longer the U.S. continues to prop up and posture with its positive headline numbers, the stock market continuing to go up, and really add to that propaganda, the longer I think that'll continue to be the case until things ultimately start to break down and shifts begin to happen. And I got to agree with you. I think China is going to absorb a lot of this demand that was once had here in the United States. So James, if you would, share some closing thoughts here. I'd like to get your thoughts on where should people be focused? What do people do kind of waiting for this to play out? Should they be in cash? Should they be renting their house, owning their house? Where should the focus be as we kind of deal with this and as things start to shake out?
Yeah, well, the bigger perspective on this that I provide at the Corbett Report is not just looking at what we're being presented with on the surface level here, which is sort of China versus the US, which is shaping up to be the 21st century equivalent of the 20th century Cold War between the US and the Soviet Union. And we're seeing them starting to butt heads, and we're starting to see the geopolitical reality starting to shape around that. And so we're seeing some sort of, it's being hailed as maybe the BRICS or the Shanghai Cooperation Organization or something like that, which is a counter to the IMF World Bank infrastructure, or to the NATO, or these kind of counter institutions. And we're starting to see that taking shape right now. And the implication is, well, we have to take a side here, and we have to, well, the future is going to be in Eurasia, so people should be investing in that, or something along those lines. I think that's too simplistic. I think that neglects the historical reality of how China became the economic juggernaut that it is right now. It didn't just happen overnight. It happened through the groundwork that was laid decades prior, back as far as the opening of relations back in 1970, 71. But certainly by 1980, 81, 82, when you had people like Rong Yi-ren of CITIC going to New York, specifically not to the center of government power in Washington, D.C. No, he went to New York. He went to Chase Manhattan in a meeting with David Rockefeller, attended by many bankers from Wall Street, where they signed the agreements that laid the financial infrastructure that led to the rise of China as an economic juggernaut. So this happened decades ago. It's been planned, and it's been talked about at length and ad nauseum by geopolitical and other commentators for a very long time. You have Henry Kissinger writing all about China and frequently visiting China. You have George Soros talking about China as the engine and the model for the New World Order and all of this. You have this type of rhetoric for a very long time, where clearly China has been positioned to be essentially the big foil for the United States and financial power, where actually Wall Street and a lot of the banking interests have been cooperating with China all this time. So I think there's a deeper story going on here, which to me suggests that the answer is not going to come in investing this way or that in either side of an equation that is fundamentally controlled by basically the same people. I think the solution then, well, if we want to look at it even just at a technological level, essentially these monetary instruments that people are trading in right now, these Federal Reserve notes or whatever the paper of choices in your country of residence, is essentially, it's centuries old technology. And it relies on this idea that we need a central bank to ward over the money supply and control it from a top-down position, and to set interest rates and all of this in order to control the money supply. That's 20th century thinking at best. 21st century, we're looking at the ways that decentralization can and is already taking place in all aspects of our lives. Me sitting here in Japan doing a podcast that's been seen literally tens of millions of times all over the world, and I get feedback every day from people on every corner of the globe. That's an example from the information level of how we're being decentralized. On the monetary level, it is things like cryptocurrency, but not just cryptocurrency, but certainly things like that, which are pointing the way towards decentralization of the financial and monetary infrastructure of our lives. And I think that is going to be, I'm not saying that, hey, go out and invest in Bitcoin and everything's going to be okay. Certainly not. There's a lot of volatility along the way, and I certainly wouldn't want to suggest that people, take their life savings and put it all in some nest egg like that. But I'm saying that in the future, if we want to escape these types of geopolitical situations which result from this controlled top-down system, we're going to have to find ways to participate in peer-to-peer currencies of various sorts. And we now actually have the technology and the ability to do that, and I think we have to explore that. So if people go to CorbettReport.com and type solutions into my search bar, you'll find dozens of podcasts and interviews and videos that I've done over the years talking about, to a large extent, monetary solutions and what people can and should be doing in terms of forming community currencies, LETs systems, those types of things, which I think will be the actual infrastructure that survives whatever kind of financial cataclysm that may or may not be coming. Again, I don't have a crystal ball. I don't know. But at the end of the day, if and when, Great Depression Part 2 starts, it will be the community infrastructures that you have in place, which doesn't, in this day and age, necessarily mean your geographical community, although I think that is important. But now we have communities of interest that form online and that can transact and communicate without sort of top-down interference through things like cryptocurrency. So I think that's the way forward ultimately. And again, I'm not saying this is going to be a way to make all sorts of money or to protect your nest egg. That's investment advice, which is a whole different thing, which I don't, that's not my business. But I'm looking for the way forward for humanity to basically survive this incredibly crazy time that we're living through. And I think things are only going to get crazier from here.
Yeah, and I agree with you 100%. And that top-down control really is being fought by cryptocurrency. And I look at it as trying to contain water in your hand. You're fighting this inevitable, and the solution, one of the solutions, was cryptocurrencies and maybe gold or the internet is this decentralized platform that's allowed communication to be much more level equalized. We're not having to just depend on a few mainstream news outlets, but here we are just having a conversation, whether people think we're crazy or not. The opportunity to discuss these sorts of things and put these conversations out there is making people a lot more informed and not just controlled by one narrative. And that's one of the things I absolutely love about the internet. And I appreciate the work that you do and coming on and sharing this information. So you alluded to it. If people want to learn more about what you do, maybe just give one final plug. And yeah, thanks, James, for coming on Crush the Street with me.
Yes, all my work is available 100% free for download at corbettreport.com. That's CORBETT report.com. 11 years now of archives of audio, video, interviews, articles, all sorts of things that I've done over the past 11 years. Again, all freely available for download. I hope people check it out. Use it as a resource. That's what it's intended to be.
Thank you, sir.